Boom, all right. Hello, everyone. Welcome back to the Relay Bitcoin podcast. I'm super excited today to have Pierre Rochard with me. Is this how you pronounce the name? Because I speak some French, but is it
Uh,
is it French? Are
it
you
is, yeah.
French?
So it's Pierre Rochard.
Pierre Rochard, hein? Ah, voilà. Alors, français, c'est ton premier langage.
Wait,
You speak French. Your first language is French and second is English.
correct.
Oh, really? Wow. Okay.
Yeah,
But you like bilingue? Quoi. It's
yeah.
like
And
both.
I learned English when I was 4 years old, so it
Yeah.
wasn't that far apart.
Yeah, yeah. So that's what all the kids do in your region. That's it's like everyone speaks both languages.
No, I moved when I was young. So I was
Mm.
born in Paris and moved to Scotland when I was 4 years
Oh
old.
wow. Okay. Okay. Interesting. And for how long did you live in Scotland?
Yeah, 2 years, and then moved to Phoenix, Arizona, and then Austin.
And that's where you're now, Austin. Nice, nice. Is Austin? Does Austin have a nice, vibrant Bitcoin community? I mean, a lot of the startup community is coming from California and even the East Coast to Austin, right? But what about Bitcoin specifically?
Yeah, there's a Bitcoin kind of co-working space called the Bitcoin Park at Austin.
Heard of it? Yeah.
And lots of great companies here, like Unchained Capital, for example, is
Mhm.
based here in Austin.
Nice. So Bitcoin has hit a new all-time high, I
Yeah,
think 24 hours ago while we were
yeah,
recording. So congrats, I guess. Like happy all-time high, right? It's in
yeah,
US dollars though only, and in euro, I think as well. Not in Swiss
yeah.
francs. It's interesting. And Swiss francs didn't even break the 100K mark. It did a few months ago when we had the last all-time high. Now it hit a new all-time high in US dollars, but not even the 100K mark and not a new all-time high in Swiss francs, which is interesting. But so, are you still celebrating all-time highs? Is it still something you watch, or how do you react to
Yeah, I was telling my wife I was really disappointed that I missed the all-time high because it was while we were sleeping.
that?
And I joked with her that I need to set up an alarm that wakes me up when there's an all-time high at 2 in the morning.
Exactly. That'd be nice. That'd be a nice app to it just all
Uh,
it does is
yeah, I don't know. I don't know how nice that would be. I'm too old for that.
you are into Bitcoin now for how many years? 12, 13 years?
Yeah, something like that.
How many all-time highs must that be?
Quite a few.
Dozens of all-time highs. It's always a special thing, especially because a lot of people get in touch and it sparks interest in people's mind that otherwise maybe are not super interested. Price is just interesting to many people that are newcomers, right? So that's why I'm always happy to share, oh, there's a new all-time high, because I know that a lot of people will now Google Bitcoin again and kind of learn more about it because many come for the price, but then actually they stay for the store of value, right?
Yeah, and the self-sovereignty.
Yeah.
So I think that's been a big source of Bitcoin adoption is the price appreciating, price volatility. But I also think that in bear markets, it decreases adoption. So when the
Mhm.
price is going down, people just don't want to hold it.
We do see, though, at Relay, for example, that it indeed is the case that retail investors that are just, buying a little bit at a side, they do sell when Bitcoin appreciates. So when there's new all-time highs, they do sell. So we see that kind of trend. And I'm wondering what your take on this. But we're seeing
Yeah.
that more
So
more
yeah.
selling of retail to institutions. So institutions buy at all-time high, but retail sell. What's your take on that?
Yeah, so Bitcoin's been a retail-driven phenomenon since day zero, really. And so when it goes up in value, you have the wealth effect, where people either want to consume more because they have a healthier balance sheet, or they want to rebalance their balance sheet, right? So they
Mhm.
want to go buy some real estate, or start a new business, or diversify into stocks and bonds, and so they'll sell their Bitcoin to do that. Historically, that hasn't worked out too well for them because then Bitcoin continues to appreciate in value. But at the end of the day, that it is what it is, right? So if somebody decides that they want to sell some of their Bitcoin and donate it to a charity that perfectly valid use of money, right? So that's what the freedom for the Bitcoin affords people is, the ability to sell it when they want to.
Exactly. And in the end, what are you saving for, right? You are saving for, at one point, you want to buy a house for you and your family, you want to buy some nice stuff, you want to invest in a business, you want to found business. So the money is here to be used, and Bitcoin is just the best, soundest form of money where you can also actually transport the value into the future, right? And that's the hard part is not buying Bitcoin. The hard part is to keeping it for the long run. But then also it's fine to use it, right? And I think just still too many people are in this mindset of, oh, I need to buy Bitcoin low and sell high to make more fiat. Uh, Fiat is the worst store of value, right? The best store of value is Bitcoin. So as long as you don't use it, also don't sell it. But then once you use it, you sell it. I think that the problem I have is now retail investors are selling to the institutions just to make more fiat, which is really a trap, right? But they will learn the hard way at one point.
Yeah, I mean, I don't know what their intention is when they're selling that way. I mean, I think that we also have to keep in mind that when you look at institutions, they are aggregating capital from individuals, right? And so it's not like there's somebody that is, not benefiting at the end of the day. And so I think it's an interesting product question of what are the users actually doing. And I think that in Bitcoin, there's always been this animosity towards what you could describe as speculative activity, right? Of people buying low, selling high, or margin trading on exchanges, and that I think that when it's really I think negative is when it is pro-cyclical, right? So essentially, people buying high and selling low. That is, I think, more problematic than people buying low and selling high.
Yeah, and that happens if they don't believe in it enough, or if they haven't understood it deeply enough, is when it goes down 10%, 20%. Oh, I need to get rid of this shit, right? I need to hop off the
Yeah.
boat or hop off the train.
Yeah, and institutions are not immune to this as well, right? So
Mm.
we'll see who ends up holding or not, because when their quarterly performance review comes around and Bitcoin's down, 40%, that can cause the investment committee to ask them to trim that position as well. So
Yeah.
I don't think the institutions are invulnerable to that kind of I would describe it as emotional, right? That it's kind of emotional trading rather than
Yeah.
looking at the fundamentals of the asset and making a decision based on that.
Yeah, absolutely. And these institutions are always led by human beings, which are emotional, which are not perfectly rational. And until AI is basically steering these investment decisions, there will always be these sentiments where I agree with you, institutions are not immune to. So, are you seeing institutions like hedge funds and asset managers and even Bitcoin treasury companies as a net positive thing, or rather a disturbing thing in the adoption and development of Bitcoin?
Yeah, so I mean, I see it as absolutely necessary and extremely good, right? I mean, I have a hard time seeing the negatives, right? I don't know what people are talking about when, like there's this fear that somehow BlackRock and Larry Fink are so powerful that they're going to co-opt the Bitcoin network, right? They're going to change the network rules or something, and I don't see what their motivation would be to do that. At the end of the day, they're in it to make money, right? They're not in it to change Bitcoin, right? So they know that if they change Bitcoin, Bitcoin loses its value and they stop making money. It's that simple.
Yeah.
So when you look at like the marketing materials for BlackRock's ETF, uh, what it says is that they think Bitcoin's going to increase in value because it's decentralized and it's scarce. Right, so the moment that they try to change the properties of the Bitcoin system, they lose their marketing, points, talking points, and so I think that there's kind of a profound misunderstanding among Bitcoiners about kind of what the mission is, and that it's always I think this is the case, and if you just read any history of any ideological movement, right, that there's people who never want to stop the revolution, right? So they kind of snowball into extremism. So, for example, like the French Revolution, right? Um, and so when we look at what is the purpose of Bitcoin, there's the history of the entire movement is one of supreme disappointment, right? So there's people today who say like, "Hey, Bitcoin hit an all-time high, but look, it failed because if you read the title of the white paper, it says peer-to-peer electronic cash, and when I go to Starbucks, I can't buy my coffee with Bitcoin, and so Bitcoin has failed." And the fact that it became a pet rock digital gold meme coin, uh, doesn't matter because it's failed because I can't use
Yeah.
it as cash to buy my coffee. And
Yeah.
so people get fixated ideologically on what they think the success criteria are for Bitcoin. And so then, they'll fast forward to, so, the medium of exchange kind of payments utility angle is what I would argue led to the Bitcoin Cash hard fork in
Hmm.
2017. Um, and the counter argument from Bitcoiners was like, just use Lightning, right? That'll be fine. And so um, then if you fast forward to today, when people look at Bitcoin being held, in an ETF wrapper, um, they'll say, well, look, the only value Bitcoin ever has is in self custody. And so if it's not in self custody, then Bitcoin has failed. But that, I think, is just a misreading of Bitcoin history, right? So, for example, Mt. Gox. Okay, lots of people held their Bitcoin at Mt. Gox.
Hmm.
It got hacked, right? So clearly they should have been self-custodying. Although back then, if you could look back then, self-custody, a lot of cases was a plain text file on your hard drives.
Hmm.
uh, things have changed. They've evolved since then. Um, but then Mt. Gox goes through bankruptcy, and then people, get their value to some degree or another. And a lot of people have pointed out that the forced hodl was actually very effective, right?
Yeah,
That
of course.
they would have actually sold their Bitcoin earlier
Uh-huh.
if they had self-custodied it.
Yeah.
And so, because the Japanese bankruptcy court forced them to hold longer than they wanted to, they actually economically benefited from it.
Yeah.
And then likewise, people who bought at Coinbase in 2015 and then just held it at Coinbase the whole time, and then they open up their Coinbase account and their Bitcoin are there, and then they, let's say they go sell it.
Hmm.
Um, the idea that it has zero value because they didn't self custody it, I think it's fanciful. It's a complete fantasy because it's a denial of reality that it actually increased in purchasing power. It was a Bitcoin IOU the whole time, and then they sold it, and then they go buy a Lambo or a yacht, right? And then you come along and you say, well, no, it's not a real Lambo because you didn't buy it with self custody Bitcoin, right? It's just and so I think that what that leads to is that people get blackpilled. All right. So they come along to Bitcoin, they get orange pilled, they get really excited about self sovereignty, and then they see somebody who's not self sovereign do well for themselves, and then that to them is an injustice, right? You weren't supposed to make money off the Bitcoin ETF. You were supposed to get 6102, right? The government was supposed to seize those Bitcoin, and that would have been justice for the crime of not self custodying, of using a trusted third party, and it hasn't happened, right? So there are legitimate like arguments of, well, the problem with I think the number one problem with Coinbase is that you don't have is if you lose your access to your account, right? It's not really that even on a custody level that they accidentally lose the private keys or that the government comes along and seizes it. It's that you can't log in and that somebody accidentally deleted your account or something.
Yeah.
Um, So in any case, that's why I think that when we analyze like what is the value of having institutions come into Bitcoin, the value is that we want everybody to have exposure to Bitcoin, whether that person wants it or not. And I think that this is also where libertarian cypherpunks like they don't like this at all, right? To hear that no, actually, it's good. It's a good thing to have Bitcoin forced onto people, and for them to for example, if Strategy acquires Bitcoin and holds it in cold storage at a custodian, and then the S&P 500 adds Strategy to their index fund, and then all of these normies that don't like Bitcoin are forced to invest in Bitcoin through four layers of intermediation, and then they economically benefit from Bitcoin, and like there's this kind of perverse thing of, well, we don't want them to benefit from it because they didn't choose to voluntarily hold Bitcoin. But from a society, a social stability perspective, you don't want massive wealth inequality where it's only Bitcoiners who are actually, benefiting from Bitcoin. And especially if it's just saying like, you have to be young, right? Because you have to embrace the risk and you have to be tech savvy. And so, that would just kind of limit the adoption for Bitcoin quite a lot.
Yeah, and why not let everyone decide on their own, as libertarian basically principles say, right?
Well,
Let
that's the
everyone
problem, right?
decide.
Because what I'm describing, like the pensioner who is invested through an institution, they don't get to choose
Well,
all of their investments, right? And
yeah,
so, like from a libertarian argument, it would be like, well, these people should not be forced to invest
yeah,
through this institution for their retirement or for their insurance or whatever it is, and they are. And that's the
okay.
reality of it. And so either we accept reality or we turn Bitcoin into yet another political cause, right? Of, oh, we're going to protest in the streets and we're going to do all this. Like the whole
Mhm.
point of Bitcoin was that it's not a political cause, right? It's that everybody acting in their rational self-interest would adopt it, even if they're politically opposed to it.
Yeah, exactly. And then, but then everyone can make okay. Once you make the decision of yes, I want to invest in Bitcoin, then how do I want to invest in Bitcoin? That's fine, right? Everyone can make its own decision based on his investor profile. Everyone can decide on, well, it is actually important for me to have a counterparty that I trust, which is maybe my bank or my exchange or Coinbase or whatever. I trust them more than myself to keep the keys. Okay, that's fine. It's not how I do it, but it's fine if
It's
you
also
want to
not
do it that
mutually
way.
exclusive, right? So you
Yeah,
can
no,
actually do both or
yeah,
all of the above,
exactly.
and that I think might be a better form of diversification than buying altcoins is
Yeah.
having different custody methods.
Yeah, for sure. And then there are the big institutional like pension funds, for example. They cannot, even if they wanted to, from regulatory compliance perspectives, they could not even buy and hold self-custody Bitcoin. They
Well,
need something
it's
like an
irrelevant.
ETF or
It's
something.
it's it's an irrelevance because who are the beneficiaries? It's the pensioners, right? It's the
Hmm.
person who retires, and
Hmm.
so self custody in that context would be the pensioner self custodying. So once you say, well, there's a trusted third party of the institution, then it doesn't really matter. It actually might be better if there's two trusted third parties. Is better than one trusted third party, right? Because they're providing a check and balance on each other.
Hmm. Hmm. So while we were talking about this, I'm thinking that there's so much like pension money and institution money that already has been going into Bitcoin lately. I mean, since the ETF launched, like the BlackRock ETF is a crazy beast, right? And it's more than 70 billion now sits on this ETF. BlackRock makes a lot of money with it. So I agree to your earlier point that they don't want to change anything because they make a lot of money. The more asset under management they get with their selling story now of Bitcoin, they don't want to change this. The more asset under management, the more volume in and outflows with the volatility, the more money they make. Larry Fink is super happy as things are going now. He doesn't want to change anything. He just wants to sell more of it, right? And also with the other ETFs, we're way above 100 billion already into Bitcoin, and it's just growing. And Bitcoin treasury companies are buying even more Bitcoin. The last, I think, 3 quarters, they had higher net inflows, mostly driven by MicroStrategy, but also others, than the ETF. So there are billions and billions invested into Bitcoin. Question is, why is the Bitcoin price not going bananas? Why is it not
Yeah.
even higher than it is now?
Well, it's because of what we discussed earlier with the rebalancing, right? So somebody who bought Bitcoin for, three raspberries and $1, that in 2010 or 11, right?
Hmm.
That they're sitting on massive capital gains, and so it would be economically irrational for them to not sell their Bitcoin after such a or some percentage, right? Obviously, they should keep they should probably keep most of it, but that then uh, that at scale is massive, right? And
Hmm.
so there's a lot of people who made a lot of life changing money,
Hmm.
who are taking chips off the table, and $100,000 I think was a big symbolic number.
Hmm.
So I think that's the primary cause of it, and that really, I don't buy any of the manipulation stories, right? People will say, "Oh, the price is being manipulated by the institutions." I don't think that's true at all, because institutions have an incentive to go in both directions, right? They want to pump the price, they want the price to be lower, they want the price to be the same. Like different institutions have conflicting interests on where the price should go day to day. Um, but I think that we also have to realize that Bitcoin is extremely liquid. The Bitcoin market has completely changed. So I actually don't believe in the 4-year cycles anymore. I think that those are fiction at this point, because um, the quantity of Bitcoin getting mined relative to the trading volume is just it's immaterial.
Yeah.
And so uh, even now we have the derivatives markets, right? So we've got CME futures, we have options on IBIT, which is now massive. Options on MSTR also massive. And
Hmm.
so when we look at even Bitcoin's volatility, in a way, there's massive volatility suppression. And I think the outcome will be that Bitcoin goes up and then it goes sideways, it goes up, it goes sideways, and that this is going to cause a lot of mental health problems for people who are stuck on the 4-year cycle, right? Where they want a parabolic top, and instead what they're going to have is a very boring, slowly getting rich asset, right? And so um, that's going to be really frustrating for a lot of folks. They're going to have to relearn a lot of things, but I think that's what the current setup is, and I don't really see any arguments against it.
Hmm. Because the 4-year cycle is mainly driven by the halvings and the block subsidies, right? Which are, I agree to you, that is so small at this point, right?
Yeah.
To the actual volume that is the selling and buying. That's the like supply and demand. That's what drives the price now, and it's completely independent of whether we have 6.25 or 3.125 or whatever, how many Bitcoin per 10 minutes that are mined, right? Because even the miners also, they do mine, but most of them, and you're the mining expert, so I rephrase the question to you, they are not even selling most of the Bitcoin they're mining, right? They
Yes,
keep them.
some are selling, some are buying, some are holding. I think that the main thing is that 95% of the Bitcoin have already been mined, right?
Mm.
So it's just that last kind of tail emission that is small compared to the rest of the pie.
Yeah. In Vegas, have you been in Vegas, the
Yeah.
conference? There, it was very mining driven, right? A lot of miners were talking there, and it was interesting to hear that. For me, the takeaway was they're not really buying; they're trying to accumulate, or they're trying to keep as many Bitcoin as they mine as possible. And so what they do is they go into lending, right? They use the Bitcoin as collateral to get a loan to finance their operations, right? Is that what you're seeing as well, or do you think that's the future?
Well, I think that they are pursuing multiple strategies at the same time. And so, first, the huge pivot towards HPC AI deployment. was driven by the low economics of investing in new mining hardware, where you just don't earn very much per megawatt compared to what you used to. Bitcoin mining is the most competitive industry in the world, and so the margins are very thin. HPC AI, I think, has bigger margins depending on where you sit in the stack, right? And we'll see how things evolve there, because I think that one possibility would be that the software just keeps getting better and kind of breaks the hardware in a sense of you just don't need as much hardware as you thought you used to, or as much energy consumption. But that might also be Jevons paradox, right? Where the more efficient the software is, the greater the demand for energy and hardware is actually. And so what's it going to look like when we have humanoid robots, right, walking around everywhere, driverless cars for everything, and I think that the amount of abundance that's going to come from AI is tremendous. But for Bitcoin miners, it's an interesting thing, because people pointed out the halvings as, Bitcoin's. What are the Bitcoin miners going to do, right?
Yeah.
Who's going to pay the Bitcoin miners? Well, you don't need to pay them. There's plenty of other things they can do. And so it's not like the Bitcoin network owes the Bitcoin miners a living, right? We have to pay them, otherwise they're going to starve. How are they going to feed their children, right? So it's kind of a silly argument. But then when we look at the security budget aspect of it, I think it's actually even sillier, right? Where they say, who's going to confirm the transactions, right? Who's going to want the transaction fee revenue? That's at the end of the day. And there's always going to be demand for transactions, and people are going to pay transaction fees. But the idea that Bitcoin's not secure if you don't have a certain level of security budget, I think is a fallacy, because it's basically, if we use the metaphor of like the military, it's like saying, how are you going to defend a country if you're not spending lots on the military? Well, you can actually look at historical examples of guerrilla warfare where you can defend the country, on a very small budget, right? So like Vietnam, it didn't defeat the U.S., but it definitely drove the U.S. back. The Taliban in Afghanistan, they won, right, without having a massive military budget. And so I think that there's asymmetric warfare where that's actually a much better metaphor for Bitcoin mining, the asymmetric warfare of having it be permissionless, right? So anybody can contribute hash rate. Anybody can run a mempool and actually have transaction fees pile up in the backlog of transactions, right? So I think that that's probably the most misunderstood aspect of Bitcoin mining. And then on the financial side, that's where it's really interesting, because Bitcoin mining companies, the publicly traded ones, are kind of the OG Bitcoin treasury companies, right? So they have massive stockpiles of Bitcoin that they can borrow against. But I think that the challenge for them is in what narrative they come to the capital markets with, right? Do they go to equity investors and say, we are HPC AI companies that should have this level of multiple, right? This is our metrics. This is what we expect to be valued against. Or do they go to equity capital markets and say, we are leveraged long Bitcoin, and here's the multiples we should be trading at. Here's the metrics. And so I think that's challenging for Bitcoin mining companies is trying to figure out how to communicate their value proposition to equity investors.
Do you think that some of them will transition into just more pure play Bitcoin treasury companies because they already have the NAV, they already have quite substantial Bitcoin amounts on their balance sheet, and they're now seeing, well, right now not really, but in 5 years, in the 5 years chart, you see a lot of success of Bitcoin treasury companies. And yeah, so maybe two questions. Do you think mining companies will transition into that strategy? And two, what do you think in general about this whole Bitcoin treasury company mania?
Yeah, I think it could potentially create a lot of value for shareholders if these Bitcoin mining companies were actually to unbundle, right? To say, okay, we're going to spin off the treasury and then have kind of the energy infrastructure as a separate entity.
Mm-hmm.
Um, because at the end of the day, it's two different kinds of equity investors, right?
Mm-hmm.
The leverage long Bitcoin and then the HPC AI thesis. And so I think that they probably are worth more separate than together.
Mm.
And that might be a really interesting M&A trend to see, where maybe we'll see like Bitcoin treasury companies acquire the mining treasuries, right? And that's how they end up pure play. Because if you look at how to finance these activities, it's very different because when you're financing Bitcoin, Bitcoin has perpetual duration, right? So Bitcoin's going to be around forever. The corporation's going to be around forever. And so you want to match your liabilities with your assets, right, in terms of duration. And so the liabilities should be perpetual as well. And that's what Saylor is accomplishing with these perpetual preferreds. Uh, Bitcoin mining equipment is very different. So its depreciation schedule, you could say it's like anywhere between like 1 and 10 years, right? And so you would never want to finance Bitcoin mining equipment with something that has a longer duration than that, or it's just a mismatch, or a shorter duration than that.
Mm-hmm.
And so I think that's where kind of historically Bitcoin miners gotten themselves in trouble, is that like the Bitcoin mining equipment ultimately its value is going to zero, right? It's going to get used up. It's going to physically, but also it's going to get diluted from a difficulty adjustment perspective, right? There's infinite hash rate in the totality of time that will be applied to Bitcoin mining, and so that's where it's not scarce like Bitcoin is. Like Bitcoin, there's only going to be 21 million Bitcoin mining rigs. There's more mining rigs getting manufactured every day, right? It's not like there's a halving of manufacturing for mining rigs, and so that's where it's a very different dynamic from a financing perspective. You want to be very aware of that.
Mm-hmm. Mm-hmm. Interesting. Financing in general, I think, and you mentioned the financial engineering around MSTR and what Michael Saylor does with these different financial instruments. Super interesting. What's your take on how this will evolve in terms of sucking all this mandated capital into Bitcoin indirectly through, for example, mining companies or Bitcoin, probably mainly also Bitcoin treasury companies, because there are trillions worldwide in different currencies that are locked up in mandated capital structures where, you have to invest in bonds, you have to invest in converts, you have to invest in prefs, you have to invest in equity, common stock. So what I think Michael Saylor is trying to do is this release wolf, right, where he offers them exactly the product they want. Look, here's the pref, here's the bond, here's this, and then in his backend, he uses the money to acquire Bitcoin, and he believes that Bitcoin will perform 20 to 50% year over year, and so he will be easily be able to pay back or refinance these things. So both sides are happy. He can buy more and more Bitcoin and create the most valuable company in the world, and on the other side, they get their paper to invest in and make their investors happy, right? Do you think that's gonna go the way? Like, are you buying into the vision of this MicroStrategy, or how do you think this will evolve? Because you're of course also an expert in kind of financialization around Bitcoin.
Yeah. Well, okay. So first of all, it's not just about the investment mandates on what they're allowed to invest in. There are also fundamental differences in risk appetite, right? So there's a lot of people who Bitcoin's not risky enough for them. So they are looking to try to outperform Bitcoin by taking on more risk, right? So that's been true for the entirety of Bitcoin's history. So people were on, one of the oldest platforms is Bitfinex, right?
Mm-hmm.
Bitfinex, the reason it's continue to be very popular is because you can go leverage long on Bitfinex, right? You can and same thing for BitMEX, for all of these kind of exchanges where um, so you got people who go leverage long, and then you have people on the other side who are lending dollars, right, and earning the funding rate. And so that has also always existed, and I think contributed to the growth of tethers and stablecoins. And so as Bitcoiners, those two extremes are very foreign to us. We're right in between, right? We like spot volatility. We like spot risk return. We don't want to take on more risk, and we don't want to take on less risk. But guess what? I think that 99% of the world's capital are on either of those sides, right? So we're like the 13 percenters, I think is the percentage, who want to hold in cold storage and like spot risk return. Mm-hmm. And so when we look at the financial engineering, it's really a question of what Saylor's doing is building a better margin trading product, right? And the reason why it's better is that he has removed the liquidation problem of Bitcoin's price crashes, and then you're forced to sell. You have to liquidate because you have negative equity. And so that, I think, is the huge advantage of the Bitcoin treasury company, is that you get rid of the liquidation trigger, and then you also have very good liquidity, right? So on a traditional margin trading account, you can't sell your account, right? You can't sell your leverage long position as is. And that's the nice part about having MSTR and STRC and all that. So then the other piece of the puzzle is that a lot of people have dollars that they are comfortable lending against Bitcoin, but they're not comfortable with wrapping it in tethers and sending it to Bitfinex or whatever it is, right? Mm-hmm. Which, no offense to those guys, like, they've built a great product, so I don't think it's their fault, but that they would rather have it be at Charles Schwab or at a traditional Wall Street brokerage firm. Mm-hmm. And so that's what STRC enables, is that you can open up Robinhood and you can actually earn 10% dividend yield and be able to lend against Bitcoin that way. That is more comfortable than the historical opportunities there.
Yeah, super smart. What is the Bitcoin Bond Company doing? You're the CEO at the Bitcoin Bond Company. What are you guys doing?
Yeah, so there's trade-offs here, right? So the nice thing about the equity is that it's very liquid. The negative part about it is that it does not have a maturity, and so by design, and that's actually, it's a good thing. It makes sense for what it's going for. But if you look at fixed income investors who are interested in self-liquidating notes, right, that have a maturity, they can't invest in a perpetual preferred equity, right? It's completely outside of their mandate, because they're not going to get their cash back in 5 years, in 6 years, or 7 years, right? And what they're having to lend against today is pretty low quality collateral, right? So they're lending against empty commercial real estate. They're lending against private equity companies that of dubious value, et cetera. And they don't have a way of diversifying to lend against Bitcoin. And so the Bitcoin Bond Company, it's all about taking Bitcoin, putting it inside of a special purpose vehicle that is pre-programmed to auto-liquidate in 5 years, right? And so that's really the rule that these SPVs can violate, is never sell your Bitcoin, right? These upfront are saying, we're going to sell the Bitcoin in 5 years, and we're going to pay back the bondholders. And so that's what allows for a completely different area of financial engineering that has not been, it's not even competing against MSTR. It's just a completely different world of finance. And so that was my motivation to start the Bitcoin Bond Company, is to do something that nobody else is doing.
And are these vehicles publicly traded?
Not at all. So it's on the opposite end of the spectrum, right? So it's all about private credit, private placements, and having basically zero liquidity, right? It's not. But these investors at the institutional credit funds, they don't want that. They want, what they want is something that they can hold for 5 years and then get their fiat, right? Get cash back, right? And so that's the whole thesis of the product.
And what types of investors do you see being interested in that?
Yeah, so if you look at the history of capital markets here in the U.S., after 2008, the financial crisis, the regulations on the commercial banking system really dramatically increased. And so this was a good thing, I would argue, right? It makes the system more stable, that you have greater reserves for these banks, and that but it actually had some negative effects, right? So if you look at what happened with Silicon Valley Bank, they had a problem not because of the credit quality of the lending that they were doing, because it was actually, they were holding treasuries, right? They were lending to the government, and so they had a duration problem. A lot of the commercial lending went into what's called private credit. And so these are actually, I would argue, the correct way to lend, which is that you have duration matching where LPs contribute to the funds on, let's say, a 7-year term. And so it's much more stable funding than what we had with demand deposits and, FDIC insured, yeah, but the deposits can disappear overnight. And so these private credit funds are I think the future of financial intermediation in the fiat system. And the nice thing about them is that they have less regulatory oversight or over-regulation from the FDIC because they're not FDIC insured. And so you don't have the kind of political involvement of the commercial banking system where the banking regulators are telling them how to lend and who to lend to, right? And so these private credit funds have a much wider aperture for what they can lend against. And I think that they are very interested in lending against Bitcoin if that can deliver a higher risk return profile than lending against all these other asset classes.
You can be much more lean and nimble and fast and flexible than if you're a big, publicly traded, highly regulated vehicle, right?
Well, it's not really that they're commercial banks being publicly traded is fine. It's that they are relying on deposits, right? So these are money that people can, take out of the bank at any time, and that because of that they have FDIC insurance, and because of the FDIC insurance, they have a lot more regulations on what they can lend, right, and who they can lend to. And that's really what caused, like, Operation Choke Point 2.0 was the FDIC leaning on banks, commercial banks, and they can't do that with private credit companies, even if those private credit companies are publicly traded.
Yeah. Interesting, super interesting. I've learned a lot today. We're already arriving at the final question I always ask every guest. So how much of your total wealth is in Bitcoin? And I will add to you how much is in other, like, Bitcoin derivative financial instruments, like public, Bitcoin trading companies or mining companies or vehicles that you just described.
I lost everything in a boating accident, so unfortunately, don't have anything to invest with other than just my time, right?
All right, and most of your time does go into Bitcoin.
Yeah.
All right, Pierre, thank you so much. This was amazing. Thanks for taking the time, and I wish you all the best with your company and with everything you're doing. Keep pushing out this great content about Bitcoin. Really enjoy following you, and thank you. See you soon.
Yeah, thank you, Julian. Have a good one.
Cheers,
Bye.
mate.
Hey, this is Joel again from the Relay team. First of all, thanks for listening or watching to the podcast. We really appreciate your help here. If you want to actually help us out further, you can leave us a 5-star review in the Apple Podcasting Store, in Spotify, on YouTube, or wherever you listen to podcasts, because this way we'll actually reach more people with this fantastic content. And I'll see you in the next one.